Hi everyone, I hope I'm audible and visible to all of you. Welcome to this session of the Crypto Masterclass. I hope before this video you've already seen the first video, which is not your keys, not your coins. In that I've explained basically how crypto is different from other assets. What's the fundamental difference when we talk about a virtual asset as compared to a physical or tangible asset? Now, in today's session, we are going to talk about the 10 most important metrics for crypto. This is absolutely essential as a starting point because it is these metrics that is going to help us to figure out whether a particular crypto is worth investing in, what is the right price to enter, what is the right price to exit. So that's what we're going to talk about today. As always, let's keep this an interactive session. Whatever questions you have, keep posting it there and I'll keep answering them. So let me first quickly share my screen. Give me a second. I'm hoping on my screen you are able to see something called Mkt Cap. And I'm also going to put the URL in the comment. So you can click on it if you want and open it up on your screens also. Okay. Now, of course, there are alternatives to CoinMarketCap. It's not necessarily this is the only site that you should be using, but it's one of my favorites and a very simple and one of the oldest sites when it comes to listing all the different cryptos and giving us all their different metrics. Now, look at this site. Obviously, there's a lot of data. You may get a little confused to begin with. So let's scroll a little and go to Bitcoin. Now, when we look at Bitcoin, we see that the first metric that it shows us is price. Now, obviously, this is the single most important metric. It tells us that as of right now, if you want to buy Bitcoin, what is the price in various currencies? So here on the top, you can always change the option for the currency that you want to use. So I think that option is here where you see currency written. So if you don't want USD, you can click on it, look at it in INR, look at it in any other fiat currency. For now, I'll stick to USD. Now, there are a couple of important things to remember when we look at this price. This is not necessarily the price you're going to get in your exchange when you go to buy. And I'll tell you the reason. Like, for example, in India, the price of Bitcoin is always a little higher, even when you translate the USD into INR. So, for example, it would have said, say, $100,000 per Bitcoin a few days ago. Now, at that time, when you looked at the rupee dollar rate, let's say it was 86. So logically, in INR, you should have been getting the Bitcoin for 86 lakhs, but it was over a crore. Now, this happens a lot because of liquidity issues, because every single country in the world is not going to have the same kind of liquidity. So sometimes prices can be different from what you are seeing on CoinMarketCap versus what you will actually be able to buy it at. That's one very important thing to remember. For example, in Korea, they call it the kimchi premium, where again, you'll realize that some cryptos are more expensive in the local Korean currency as compared to what it would show in the equivalent in dollar. So that's point number one to remember about prices. Another interesting thing about prices is we usually talk about something called the OHLC, which stands for open, high, low, close. So we look here on my screen. So let's say we look at February 28th, that's yesterday. The price opened at 84,705. The high of the day, which means, so open is the first traded price. So at midnight, what was the first price of Bitcoin? Close is at the end of the day, what was the closing price? High is during that particular day, what was the highest it hit? And during that particular day, what was the lowest it hit? And if you see here, sometimes the difference can be enormous. I mean, the difference is 85,000 versus 78,000. That's almost a 7,000 rupee difference between the high price and the low price of one particular day. Now, you may have seen these kind of graphs. We call them the candlestick charts. Now, they are also built on the OHLC kind of a concept. So here, if we look, if we just take our mouse over any particular candle, so each of these things that you see, rectangle called a candle. Now here, this candle is for a particular day. So for example, if this is 2nd Jan, this is 3rd Jan, it shows us that for that particular day, what was the open, what was the high, what was the low, what was the close. And if a particular day shows you a higher close price, it's going to be in green. And if it shows you that the open was higher and the close was lower, as in this case, it becomes a red candle. So sometimes when we look at this candle graphs across a period of time, I mean, it could be day wise, you could even have per minute candles, or you could even have per year candles. It helps us to figure out in which direction the movement of the particular crypto is happening. So this is the reason that price becomes a very critical and obviously important metric for us. And in that, like I said, you need to remember prices can be different in your exchange compared to what you see here. Then another thing to remember is OHLC is a good way to look at prices, because just looking at it in isolation doesn't help you. Looking at it in open, high, low, close actually makes a lot more sense. Someone says, is there really something called investing in crypto, exception BTC? It has to take profit and move out. Nothing long term as such. Well, that's an interesting perspective, but investing needn't always be very long term. So even if you believe that, okay, in crypto, you need to get in fast and exit fast, even that could still be called an investment. I mean, I would say we call it day trading, or, trading if you are doing it in very short spans, maybe a few hours or few days. Anything beyond that can definitely be considered investing. Now, talking about whether Bitcoin is the only investable crypto, so to say, well, that's something maybe we could cover in later sessions, because today is the first one, so I don't want to go too deep into that. But yeah, sure, you have a valid point. A lot of people feel that crypto is very, very volatile. But just because an asset is volatile does not mean that it's not a good investment. In fact, you can make a lot more money in volatile assets than you can make in non-volatile assets. That's something we'll see down the path. So I hope this price part is clear to all of you. If there are any questions, please put them in the comment and I'll take that. Now, after price, just give me 1 second. Let's move on to, yeah. Let's go back here. And now that we saw the price, we also see that it tells us in the last 1 hour percentage wise what has happened. So it says, okay, in green, so 0.07% up in 1 hour, 5.84 up in 24 hours, 11.49 down in 7 days. So like this for different time frames, we can see these charts here. You can of course modify it. So if you hit these columns here, you're going to be able to see a lot of different options. Like, what are the different things that you want to see? There are about 12 different metrics that you can choose. So this 1 hour, 24 hour, 7 day. Suppose I also want to see what has happened in 30 days, 60 days, 90 days, and even in the year till date. That means this is 2025. So from 1st Jan till today, which is 1st March. If I want to see all that, I can click all those options and say apply changes. The moment I do that, then here, I can see that these other metrics have also opened up. So what's happening over the last so many days? So now here we see that in the last 30 days, it's been down 19%, 60 days so much, 90 days so much. So again, this gives us a nice overview of what's been happening in Bitcoin for the last so many days. Now, after that, we have a very interesting metric, which is called as the market cap. Now, this is obviously very critical. What market cap means, and this is used in the stock market also, is that the current value of a cryptocurrency's circulating supply. So obviously then that means what is circulating supply? Now, circulating supply is the amount of coins that are circulating in the market or are in the public hands. So now if you take an example of Bitcoin, you will always find that circulating capital supply and total is always the same, because Bitcoin did not have any kind of a vesting or any kind of a pre-mine. So what does that really mean? Many cryptos which are funded by VCs and investors, first they issue some coins to these initial investors at a lower price. But there is a lock-in period, so that when that coin becomes open to the world to trade in, the original investor still cannot sell it for some time. So that is why we see the circulating supply there is lower, total supply is higher, because some coins are locked. In Bitcoin, there is nothing like that, which is why circulating and total is going to be the exact same. There's a third kind of supply, which we call as the maximum supply. And that's a very interesting concept. Now, in Bitcoin, you must have heard that there can be no more than 21 million coins. So the maximum supply of Bitcoin is 21 billion, which means as per the tech, as per the way in which Bitcoin's tech is built, you cannot have more than 21 million coins, which is why we say it is limited, it is scarce, it has more value. Something like Ethereum has unlimited maximum supply, which means the team can issue as many new ETHs as they want. So these are the three kinds of supplies. Circulating, how much is available to the public. Total, how much has been issued, but some of it may be locked up also, so it's a bigger number. And max is the absolute most that can happen. Now that we've understood circulating supply, when we take circulating supply and multiply it by the price, that means how much money will it cost me today to buy out 100% of the circulating supply of a crypto. That is what we call as the uh, market capitalization. So that's a very interesting concept because it helps us to compare different cryptos. So for example, if we just click on this market cap right now, it sorts all the cryptos by highest to lowest market cap, and that helps us to understand which are the important cryptos, how much money is actually locked into them. So as we can see here, for Bitcoin, we see that it is almost 1.7 trillion. Now, if you look at big numbers, it's very easy to remember whether it's million, billion, or trillion. So you just count the number of digits. So 6, 9, 12, 13. So if it's 7 digits, it's million. If it's 10 digits, it's billion. If it's 13, it's trillion. That's how it goes. So here we can see that it is about 1.7 trillion. The second one is Ethereum at 269 billion. So there's a huge difference in market cap. Then we have Tether, which is a stable coin, and then Ripple, and then Binance, and so on and so forth. We'll talk about these cryptos later. So this helps us to understand how large a particular crypto is. Very similar to the stock market where we say, okay, Apple is the biggest company in the world. What does that mean? Apple's market cap is the highest in the world. Same way, market cap is very critical in crypto. And you may have heard about a concept called dominance. That means out of the entire market cap of all the cryptos in the world, how much percentage is of Bitcoin? So that is something which, if you look at the top here, you will be able to see this thing called dominance. So here it shows Bitcoin is right now 60% and Ethereum is 9.6, which means if we take the entire crypto market cap of the world, 60% of that is Bitcoin and about 10% is Ethereum. So dominance also becomes an interesting thing to factor in. Then we come across something called as volume. Now, volume means how much of that cryptocurrency was traded over a particular period. So usually volume is in 24 hours. So over the last 24 hours, how much of Bitcoin has actually changed hands? Now, that's a very important thing because it shows us that there is some real transaction going on with that crypto. It's not artificial. Of course, certain amount of this volume is suspected to be fake. Then certain amount of this volume we don't even get to know because when it is happening at internal crypto exchanges, it is not hitting the Bitcoin blockchain. It is happening within those databases of those crypto exchanges. So it may not even represent the true value. But it at least gives us a rough estimate about how much of a particular crypto is changing hands. And if you want to see in terms of volume, which are the highest, we can just click on that button. And there you'll be surprised to know Bitcoin is not the highest traded. Sorry. The highest traded is actually a stable coin called as Tether. So here that based on volume, the number one is Tether, the second is Bitcoin, and the third is Ethereum. And here we can see their 24-hour trading volumes. I think I see a question. Is OHLC as per India time? Day open or close as per time? No. So what happens is it would depend upon where that particular platform runs. So CoinMarketCap, to the best of my knowledge, goes as per PDT, Pacific time. So it will depend upon that. So maybe if you look at the prices on an Indian stock exchange, it may show it to you with Indian time. It would depend upon where that particular is running. Usually I find that the prices are either in the UTC timing, or in the Pacific timing. This data also includes BTC traded on OTC. So that's a good question. So like I said, we are not 100% sure. Different platforms have different ways in which they show you the volume. So there is one which is the chain volume. That is the real one where we know that those transactions have taken place on the Bitcoin blockchain. So that is kind of, okay, very authentic. Then comes how much has been traded on different exchanges. Now there are about 200, actually more than that exchanges. Again, let's look here. So CoinMarketCap shows us that there are 797 exchanges. So obviously nobody is going to look at all 700-800 exchanges. Usually we take from the top 10 and everyone has their own ways of figuring out what is the volume. There's no standard answer to that. So now that we've seen this and we've understood volume, let's click on Bitcoin and go in. And then there is another very interesting metric for us to see. Now that metric is called as the all-time high and the all-time low. Now, what does this mean? That means in the history of that particular crypto, What has been the highest it's ever reached? So when we look at Bitcoin, Jan 20th of this year, which is about a month ago, it hit 109,000. 114.88, so about $109,000. That is the highest that Bitcoin has ever hit till today, and the lowest as per when it is recorded on coin market cap is 0.04. That's 4 cents. Now actually Bitcoin was even lower, but then coin market cap has started its date from 2010. Now before that there was a time when Bitcoin wasn't traded, so obviously there was no known price. Then came a time when somebody paid $10,000 to buy one pizza or two pizzas. That actually could be considered as the first price, but again it's not very clear what was the cost of those pizzas. But it is estimated that the first traded price of Bitcoin was, for $1 you could get 1,309 Bitcoin. But as per coin market cap, the lowest they've ever recorded was 4 cents. So this becomes the high and low, the all-time high and the all-time low. So this helps us to understand that okay, it's possible that maybe it can even fall back to such a level, and okay, we can see that it has already hit this level, and maybe in future it can go even higher. Now, if you want to see highlights for different time periods, you can use this drop down here. So for 24 hours, see, it shows me the highest is 86,000, lowest 79. If I want to see for 1 month, okay, the lowest was about 78, highest was 106. And then if I want to see for 1 year, it can show it to me. So this again becomes an important part of the price metrics. Let me see some questions. Who decides how much of a coin is to be released in the market? What is the logic behind having unlimited supply of coins? That's an interesting question. So who decides is obviously the founders of a particular project would decide. So when it comes to Ethereum, there is a bunch of people, it's usually called the Ethereum Foundation based out of Switzerland, which runs the project. So depending upon the needs of the project, see, what is Ethereum? It is a layer 1 blockchain. Now, the purpose of ETH is to pay for the gas fee for transactions on that. We'll go into detail in Ethereum later, but broadly. So depending upon how many transactions are taking place and how much you really need, they can issue more. They can even burn and reduce. Like there's a project called Binance, which regularly burns or reduces the supply. Now, in Bitcoin, it was the first, and it's a very transparent, kind of a fair distribution where anybody in the world can mine a Bitcoin. You don't need permission. You set up a hardware. If you're lucky enough, you will mine some Bitcoin. Random people then go and list these Bitcoins and provide liquidity on different exchanges. And the algorithm and the white paper says very clearly you cannot have more than 21 million. So in Bitcoin's case, this max is set by the tech. In Ethereum's case, how much to issue or not is set by the team. Personally, I always prefer projects where there is a fixed maximum supply. Because if it is unlimited, tomorrow, if suddenly the founders decide to issue a large number of coins, the value of the coins would really fall. Personally, I would always prefer limited supply coins. Any advantage profit to promoters on releasing more supply? Yeah, definitely. I mean, they stand to gain the most when they release more supply. So definitely that is a benefit to them. And that's definitely something which is scary for the investors, because you're kind of going in blind. You don't really know what the founders are going to do. When you get into a coin with a fixed max supply, you at least know that they cannot issue more than a particular amount. Now that we've seen this, there's another interesting metric which is called as the volume to market cap. Now, this is very, very interesting. And what it says is you just divide the 24-hour volume by the market cap. The higher this number, the more percentage of that crypto is being traded on a daily basis. That kind of shows more liquidity. Now, here again, you will find it's very, very high in terms of stable coins like Tether, because their job is only to be used for payment. So they may actually even hit more than 100%, like more than its volume could market cap could be traded on a daily basis. Bitcoin isn't. Bitcoin started off as something to be used for payments, but now it's a store of value. So people believe that you hold on to it and over time, the value will keep growing. So they don't keep selling it that much, which is why we see that only about 3.33% of the total market cap of Bitcoin is changing hands every day. So that's the volume to market cap. Another interesting thing which is called is the fully diluted value. So I told you what market cap is. Circulating supply divided multiplied by the price. Now suppose the entire supply of Bitcoin was available today. In that case, if you multiply it by price, how much will it be? And that is the FDB, or the fully diluted market cap also. Now here you can see that as of right now, 19.83 million Bitcoin have been mined, but total is 21. So we still know there is a little over a million Bitcoins to be created. If we take those million also into account, we get a slightly higher market cap of 1.78 trillion. Otherwise, as of today, it is 1.69 trillion. So that's the meaning of the fully diluted value, or the fully diluted market capitalization. Any questions? Let me see. Uh, does that make BTC as decentralized and ETH as centralized? Yeah, that's an excellent question that you have asked. And in fact, a lot of people get very confused over this. That what do we mean by this centralized versus decentralized? So what I'm going to do is, before I answer that particular question, let me cover one more metric, and then I'll come back to this question that you've raised. Give me 1 second. Yeah. So the last metric that I wanted to talk about is total value locked. Now this is a very interesting one. It kind of represents, and this is usually for the blockchain platforms or the DeFi decentralized platform, which we are going to go into detail in the second session, is that how many different tokens are on this particular blockchain and what is the total value of that. So for example, we can see that here it says that the total value locked in the entire decentralized finance of the world is about 97 billion. Now let's go into Ethereum, which is a very popular blockchain. And it says that the total value locked in Ethereum is 50 billion. Now what does that mean? It means all the stable coins that are on it, their total market cap is 120. Then, like this, we add all the different kinds of assets which are running on Ethereum. And here we can see their entire list. So we can say there is a very popular project called Lido. It comes under a category called liquid staking, which we'll cover in future. And total Lido coins on Ethereum is about 20 billion. Then there is Aave, which is a lending platform. Total market cap of that is 15. So all the projects on Ethereum, when we add their market caps, put it together, that is called the TVL. Kind of like in companies in the traditional world, you would use something like a book value. What is the value of all the investments that the company owns? Something similar is, what is the total value of different assets on a particular blockchain is what we call as the TVL. And according to me, that's one of the most important ways in which we can say which is the most powerful DeFi platform. And if you want to see all of them in detail, we look at a site called DeFi Llama, but I'm not going into that today. For the first session, I wanted to just overview these different concepts. Next session, we are going to do on DeFi Llama, and we're going to go deeper into DeFi. Now, let me stop sharing my screen and answer some of your questions. So one of your questions is, does that make Bitcoin more decentralized? Definitely. Bitcoin by far is the most decentralized crypto in the world. Doesn't mean it's 100% decentralized, because nothing in the world can be that. Because it's very nice to say that anybody can contribute to the Bitcoin code. But if anybody is allowed to contribute, somebody could put a deliberately vulnerable code and then hack the whole system. So there are about 6 or 8 developers in the world who are the only people allowed to make changes to the GitHub repository of Bitcoin, from where all the miners and node operators in the world pull the Bitcoin software. So there is a level of centralization that only those 8 or 10 people are allowed. Then when we look at miners, while anybody in the world can become a miner, it costs a lot of money of hardware, electricity and others. So again, there are a few top, about 5 or 6 groups of people who control or who are the biggest miners. So in some ways, an element of centralization will always be there. But having said that, without doubt, Bitcoin is the most decentralized of all the cryptos. So, sir, according to all the metrics mentioned by you, how would we use that to analyze, is Bitcoin over or undervalued? Is it worth buying at this point? Okay, that's a very, very interesting question. Now, when we look at these metrics, there is never a rule. Like if you look at the stock market, there is concept called P/E ratio and earning per share ratio. Now, some stocks would have very high P/E, some would have low P/E. It reflects how bullish investors are. There are no rules that you cannot have so much P/E. It just depends on demand and supply, how bullish you are. Now, when it comes to crypto, these metrics serve more as guidelines. They are not really very important when we look at it from a investing point of view or a buying. There a concept comes in called narratives, and crypto runs completely on narratives. And soon you will begin to realize what I mean. So I made a separate video on narratives, which after this session I'm going to share with all of you. And it's very, very important for you to go through it and understand what narratives are. So if you are making a decision about to buy, there are usually two things you're going to do. If you have inside information, so you know somebody who's launching a crypto, then obviously that's the best, because then they'll be able to tell you exactly what their strategy is, when are they launching, and you'll be able to get in at the ground floor, get in at a very cheap price. That's the best way of being in crypto. Second, if you don't have that, then you have to follow the narratives and quickly be able to figure out when the narrative is changing from bullish to bearish, and that's when you buy. So for this, like I said, I'm going to share a video with you, and we're going to go deeper into that in future sessions also. I hope that answers your question. Let me know if you have any other questions. In the meanwhile, I think I have covered all the metrics that I was supposed to today. I'm just going to check whether there's anything left. If you feel that I've missed out one, just quickly put that. Otherwise, I think we are done with that. Volume, circulating supply. Yeah, I think, sorry. The last one, which I've not done, is called the fear and greed. That's a very, very interesting concept. And let me share my screen again with you. Give me a second. That's the last metric which is still to go. Yeah. So now if you're able to see my screen, you would be able to see something called as the fear and greed. So that's here right now showing us at 20, right? Now I want you guys to tell me, when should you actually buy? When everybody in the market is scared, so that means they are fearful, or when everyone is greedy. So here right now we can see that we are at 20, which signifies fear. Yesterday also we were there, and then last month we were at neutral, which is 50, and here they have a chart which shows that as per the prices, what is the different level of people being scared versus people being greedy. Now this is a concept that even Warren Buffett talks a lot about in the conventional world, and what they say is that when people are scared, that's the best time to buy. When people are greedy, that's the best time to sell, because the logic is very simple. Most people, they follow the herd, right? So when Bitcoin is going up, it's at 100K, everybody is rushing to buy, saying, wow, it's just going to go crazy. That is the time to sell, exit. So the smart guy would have exited at about 100K. Then you sit back and wait. Then the price starts to follow, everybody gets scared, the price is falling, everybody's running away saying Bitcoin is falling, Bitcoin is falling. That is when you rebuy, right? So the real skill is in identifying those tops and bottoms which keep coming all the time. So at about 100K, a lot of people said, okay, it's time to exit. By 102, they exited. Prices still went up a little to about 107. Then they started to dip. We are right now somewhere late 70s or 80,000. Now we keep watching as the narrative shifts. And the moment we feel narrative is changing, you rebuy in. So you sell at 100, you rebuy at say 80, 85, whatever it is. And then you again wait for it to ride up. So it's a constant thing that you need to do. So even if you believe that Bitcoin is very good in the long run, it still makes more sense to constantly keep buying and selling every time the narrative is changing. I hope that made sense. And that's what the fear and greed index is also about. Stock market says buy when there is fear. It's no, actually, it's always the same. Even in crypto, I would say I disagree with you. I would say it's the same. When people are scared, it's a very good time to buy. When people are greedy, it's a very good time to sell to them. So I follow those particular rules, and they really helped me over the last several years when it comes to that. Someone says the narrative keeps changing. Yeah, of course, the narrative changes. That's the whole magic, which is why I'm going to share a video with you, in which I have analyzed all the different narratives of the various Bitcoin bull runs. So that'll help us to understand how narratives work, and that'll help us to make very good decisions. Any other questions? I'll wait for a minute or so. Otherwise, we're kind of done. We had a 30-minute session. Very nice. If there are more questions, I'll quickly answer them. Any good crypto analysts you follow on X or... No, I don't. So I do my own research, and I strongly recommend to everyone to do their own, because the problem with analysts is I'm not sure whether I trust them, because maybe they've got some ulterior motive to pitch a particular coin. So no, I don't really follow. I follow narratives. So I follow the news very carefully. I follow what the analysts are talking about, not in terms of what to buy and sell, but what is happening. So what narratives they are pushing out, I focus on that, but not really on their recommendations. Is Bitcoin hackable if all the node runners go? Oh yeah, of course, anything in the world is hackable, and Bitcoin has been hacked in the past. If I recall, it was somewhere way back in 2011, and some people found a vulnerability and they minted 21 billion Bitcoins. Total cannot go more than 21 million, but they managed to do 21 billion. But within few hours, that was solved. In the past, Ethereum has been hacked, and to fix that hack, they had to roll back Ethereum, and Ethereum broke into two chains: Ethereum and Ethereum. So the original is ITC and the new one is ETH, which is more popular. So anything in the world can be hacked. But the chances of hacking Bitcoin are lower. But of course, if it does again happen, it'll be fixed very soon. But that's the case with every single website or software in the world. Nothing is unhackable. Where to research any websites or news sites? Yeah. So your research should ideally start with CoinMarketCap because that's where raw data is. Then I'll talk to you next time about DeFi Llama. That's another place for very good raw data. And for news, you can just set up on Google, set up a Google alert for the word Bitcoin, for the word crypto, and tell it every day to make a list of the best links and send it to you by email. So you will just get the news into your inbox. I don't recommend any particular site. I would say do a Google alert. It'll keep picking it up from the best sources and giving you that information. You can set up these alerts for like as it happens or once a day, whichever way suits you. So that's the best way to get the data. What should be the future of USDT when BRICS will be coming in the market? Good question. I don't want to take it this time. This is a very preliminary session today. But in future sessions, we'll go deeper into stablecoins. What is Bitcoin Cash and different from BTC? Good question. So what happens was, in the world of blockchain, when something new has to be introduced in the technology, for example, all the miners or the people running the nodes, they need to download the latest software. But what if they don't want to do a particular upgrade? At that time, the blockchain splits, and that's what happened in Bitcoin Cash. There was some kind of technological upgrade that some people wanted to do, some said no. Because all the miners did not agree, the blockchain actually broke into two. The ones which went with the new change became a new crypto called Bitcoin Cash, BCH, and the original remained BTC. At the time of the split, if you had one Bitcoin, you were given one Bitcoin Cash for free. How many ever Bitcoin you owned, that much BCH came free. After that, they became separate blockchains. Let me just stop the sharing. After that, they became separate blockchain and their transactions are different. But at the time of that fork, we call it as a hard fork. At that time, how many ever Bitcoin you got, that many Bitcoin Cash you got for free. So Bitcoin Cash is now a separate individual cryptocurrency of its own. Hope that answers your question. If there are any other questions, I'll put them in. Otherwise, I'll see you guys next time. So great. It was nice speaking to all of you. Have an amazing weekend. Bye-bye.